Hey guys, PJ here for Watch Trading Academy, and I've noticed that the watch markets have fallen quite a bit, right? People are pretty afraid. What does it mean? Which watches have fallen? Is everything down? Is the world coming to an end? And the reality is a lot of people are comparing what's happening right now in the watch market to what's happening in '08 with people liquidating and getting out. But there's a significantly different outlook to what happened in '08 now to what's happening now in the watch market. So I want you to understand one thing. The watches that are crashing very heavy right at this moment are primarily watches that were overinflated by the increase of demand happening in the markets. So this is a big deal because not everything is crashing because not everything was overinflated. Now, you could say that there was a rise in demand in most watches. So for that result, most watches were priced higher than their true value. But there was still a lot of value to a lot of these watches prior to this. Let's take a good example. This very rare open work Royal Oak 41 was at some point $410,000. I want you to understand this because that's a very high number. This watch originally new was under $100,000. So you're talking about a 400% increase. Now this watch's value has always been $250,000 to $300,000. But after the watch boom, it now became 400. So that inflation is bound to erase itself and start to slowly go back down. However, the watch isn't slated anywhere near going back to its original or even near its original MSRP. So this is the big difference. Now, why is that? Because of the rarity and more importantly, because of its true value, not just its MSRP. There are other watches, however, that have risen in cost at a significant rate. And I'll give you a very good example of my very own 5990. This watch was $110,000 new and used was also selling immediately for $450,000, you ready to this, to $700,000. Now this inflation of over 700% certainly was not only real, but certainly wasn't something that could be sustainable. Now, that watch currently has now dropped back to the high threes, and I think will continue to go to the mid threes eventually. And the beauty of, watch trading is that the majority of people would say, well, watches have fallen, and so has the stock market, and so has crypto. But the reality is watches really haven't. The excess inflation of the market is and has taken its toll, primarily impacting watches like Patek and Rolex, the two more popular brands that people talk about. However, as you think about investing in watches, a big question that comes in is, now that the markets are kind of settled, should I be buying the dip? And importantly, which models should I be buying? So I would answer this in two very simple ways. You should always, when given an opportunity to buy an asset under its market value, take opportunity and advantage of that. However, in order to be a watch investor, you have to predict the markets 6 to 12 months ahead and protect against a drop, right, of that such market. So the way I basically looked at that in my particular view and opinion of watches is to pick specific, very hard to get watches, because it is unlikely that no matter what, these will be available in volume even during a sell-off. An example would be if you were going to buy a platinum day date, make sure you buy a platinum day date with blue Roman numerals. If you were going to buy a day date that was rose gold, make sure you buy an olive rose gold day date, giving you even more leverage should the markets change again. And same if you were going to buy a basic Daytona, it would be wiser to buy a John Mayer Daytona. Now, the rarity of watches means that less and less of them are going to be available in the market the rarer they are, and give you a better opportunity to sustain value, even if not that well in the short term, much better in the long term altogether. One of my suggestions is that if you're going to be buying the dip, you buy a more unique, exclusive, and hard to get watch and negotiate a heavier discount doing it. Many jewelers are very upset at what we teach here at Watch Trading Academy because we're teaching normal people just like you to get out there and beat their margins and actually be able to get in and out of watches without paying their astronomical numbers and allowing you to get smarter about what to pay in the market, how to position yourself so you can basically get the best deal possible. Now, the best deal possible means that you're taking their upside instead of them making a margin. This upsets them a lot. A lot of them are very unhappy that they're losing their margins as a result of our education. But today, I'm here to tell you that this education includes understanding the rarity of models. This 5968G green dial is much rarer than its counterpart in stainless and much rarer than its blue counterpart in white gold. This particular green version might be a better variation to invest in than the blue or the stainless. And again, this options can keep going anywhere from 50K watches, 100K watches, all the way up to 300, 400, 500 to $1 million watches. It's always about exclusivity, and it's always about being the only one who can provide such value to your next client. So hopefully this makes sense. If you're going to be buying the dip, make sure you do so with the support of Watch Trading Academy. Click the link in the description and learn more about how to become a watch investor and how anyone with $1,000, access to a post office, and a computer could start trading watches from their home anywhere in the world. And again, don't forget to like, comment, subscribe, and I'll catch you in the next video for Watch Trading Academy.